A few red flags when it comes to procurement irregularities that I have witnessed in the investigations which I've been involved in are that most commonly they involve some form of fraud, nepotism, or extortion, amongst other common law crimes. They generally tend to be several crimes that can be found during the entire tender process, whether it is fraud relating to the representations that are made in the tender document itself, nepotism relating to the award of the contract to known individuals, to those who are responsible for approving the tender, or extortion, where individuals approach tenderers with a view to trying to persuade them to pay some sort of gratification in exchange for the award of the tender. In my experience, having dealt with these investigations in the public and the private sector, I've noted the following red flags quite commonly. However, as I stated earlier, this could definitely be the subject of its own presentation. The first is that awards are generally to individuals or entities that are known to have ties with individuals in senior management or individuals who are responsible for allocating the tender in the tender process. So basically the tender authorization committee or the bid approval committee. We sometimes see that there are newly created vehicles or entities that are established purely to apply for the tender. And I'm not referring to a situation where we have a consortium of entities with experience that enter into a joint venture for the purposes of applying for a tender, because that is also quite common. But a situation where you have an entity with no proven track record, generally that has been registered either in the year that the tender is being awarded or immediately prior to that, with a sole director. Not to say that each of these is a fraud, but simply that I have seen this on many occasions where these entities tend to be sort of fly-by-night entities that are created solely for the purposes of being awarded the tender. And once the tender has been awarded, there is some sort of poor service delivery upon the award of the tender, because this particular entity and the individuals involved in it really do not have any experience in providing the services or the goods that were contracted for. Another is the involvement of politically exposed persons. And I think that politically exposed persons in all transactions attract a certain degree of risk. However, and we've seen this in the recent tenders that have been allegedly fraudulently awarded, numerous politically exposed persons have been involved. And as I understand it, several of them are presently being investigated by SARS. These are only a few red flags. There are numerous others in the pre-tender stage, during the tender process itself, and even after the tender, that usually signal some sort of bribery and corruption, as well as procurement irregularities. These can also relate to inadequate evaluation criteria, or the actual evaluation criteria being overridden during the tender process in order for the tender to be awarded to a specific entity. It also often involves excluding qualified bidders from the tender process for no good reason, or finding reasons to manipulate the tender process for these bidders to be disqualified. And most often, I've seen this actually in most of the investigations that I've dealt with in the public and the private sector, is the use of questionable subcontractors during the tender itself. These subcontractors often do not have the requisite skills to perform the services or tasks that have been assigned to them. And this also contributes to poor service delivery upon award of the tender. I recall being involved in an investigation where services were tendered to a certain entity, and they in turn were required to provide reports on an annual basis or as and when requested. Certain of these were of a legal nature. And despite continuously invoicing for services rendered, having investigated the matter further, it appeared that this particular service provider actually was not providing any tangible service to the entity at the time. So poor service delivery upon the award of the tender is more often than not an indicator of some sort of procurement irregularity. Moving along, I'd next like to talk about pyramid schemes. This is something that is not new in the South African context. We having seen many pyramid schemes over the years, but in the time of COVID, we've seen a few pyramid schemes that are specifically COVID related and have come about during the pandemic. A notable one was recently discussed in the media by, amongst others, the Financial Intelligence Center and the Asset Forfeiture Unit. And it involved a sort of a scheme where social media was used by the perpetrators to recruit various individuals to join the pyramid scheme. And upon recruitment, the new members were required to pay a joining fee of 180 Rand. Upon payment of that 180 Rand, they would qualify for a meat pack. So this particular pyramid scheme was aimed at preying on the needy and those individuals who saw the need to have some sort of comfort, be it in the form of food, groceries, or cash as a receivable in terms of joining this pyramid scheme. So definitely a lot of social engineering involved to prey upon people's insecurities during the pandemic. So upon joining, one would pay a fee of 180 Rand and would qualify for a meat pack, this being known as level 1. And upon signing 5 friends or new members, the individuals would then qualify for a meat pack, groceries, and 500 Rand. The monies received from the lower levels, thus funding the individuals at the higher levels. What had happened was that there were over 200,000 deposits of 180 Rand each, which totaled an amount of 42 million generated by this pyramid scheme. Some of those funds were then used to purchase luxury vehicles, which have subsequently been seized by the Asset Forfeiture Unit in their recent investigation. This particular pyramid scheme involved, or there's the possibility of charges of fraud, benefiting from the unlawful proceeds of crime in terms of the Prevention of Organized Crime Act, as well as money laundering. So a few red flags when it comes to pyramid schemes. Again, this could be the topic of its own discussion. But pyramid schemes are generally congruent with a situation where there are continuous recruitment of new members or investors. So for this reason, there must be a high momentum and continuous recruitment of new members to fund the scheme. This has been exacerbated during COVID through the use of social media, and in general by the use of social media, which makes it so easy to reach people on a platform. The continuous recruitment is thereby creates a continuous inflow of funds. Upon recruitment, members are generally asked to pay some sort of joining fee, either to purchase a product, to join the scheme, or to invest their monies, but there's always some sort of payment that must be made. And generally, later on in the scheme, we see investors having difficulty in accessing those monies after the investment has been made, simply because the pyramid scheme tends to outgrow itself with too little income and too many payments to be made to existing members at higher levels of the scheme. So pyramid schemes, I would say, have definitely been an emerging financial crime trend in the time of COVID, and I am certain that we will see more of these in coming times over the next few months. Moving on to the next financial crime, that would be the most common scam, which is experienced both internationally and in South Africa, the 419 scam. And I believe that any presentation on financial crime would be remiss in excluding the 419 scam. It is a form of advanced fee fraud where individuals are persuaded by a fraudster to make some sort of payment in exchange for whatever it may be in the particular scenario. Often the perpetrator or the fraudster preys upon an individual, be it a love interest or to purchase some sort of exotic pet or to win some sort of national lottery. The facts may differ, but the scam generally remains the same, where the fraudster uses social engineering and preys upon a victim to advance money to them, sometimes using a postal service. And thereafter, the initial payment is followed up by continuous requests for more payment. And in some instances, extortion can be involved, where there's the threat of some sort of unlawful activity on the part of the payee. Your red flags when it comes to 419 scams are generally unknown sources of money, such as lotteries, which you will be eligible for should you pay a certain amount, and unrealistic value of funds presented, $1 billion, or monies that simply would not easily be accessible. Generally, the communications received from the fraudsters contain grammatical errors, typos, and email addresses that appear to be questionable. Communications from fraudsters often also contain requests for banking details or provide banking details very early on in the communications and request payment to be made. More often than not, these banking details can be in a foreign jurisdiction. Moving on to our last emerging financial crime and trend, and this is something I've seen as well in the past year and a half, becoming more common and involving more often than not an element of cybercrime, is change of bank details fraud. So this is a type of fraud that is perpetrated with individuals or entities who are generally targeted, where the fraudster knows that this particular individual or entity will be involved in a transaction involving a large sum of money. So there's a large sum of money that is going to be transferred, or it forms part of some sort of transaction, for instance, a conveyancing transaction where payment of the property price is going to be made, or in general, in the normal course, with an entity having a service provider, where payments are made to the service provider and payments are made in terms of invoices. These are usually the types of situations that are targeted by the fraudsters. In the example that I had been a witness to and assisted investigating, the fraudster in this particular case managed to infiltrate my client's server and observe communications via email on the server back and forth. And at the opportune moment, when it was time for my client to make payment, sent an email, obviously a phishing email, that came from an address that was eerily similar to the service provider, but still different. And that email contained a request for banking details to be changed and payment to be made into the new bank account, which was duly attended to by the relevant individual in the payments department, only to find out a week later that the service provider did not receive those funds. Upon further investigation, it came about that these hackers or cyber fraudsters had infiltrated their server, had monitored the emails back and forth, and had intercepted those emails and changed the banking details. So there is usually not much recourse available in these circumstances aside from reporting it to the relevant authorities, including the banks involved in the transactions, with a view to those banks trying to freeze the funds and prevent the transaction from being completed. A few red flags that we see in these particular instances are emails received from unfamiliar addresses or addresses that are similar to but not the same as the email address is concerned, a request to change banking details, usually with a PDF document attaching the new banking details. However, one must be very careful in viewing those PDF documents because it is often legible to see that they have been tampered with. And the request received and the communications contained in those emails are generally inconsistent with the language or nature of the conversation that were contained in previous email correspondence. So that wraps up our emerging financial crime trends and typologies section. And I would like to now move on to the next section of my presentation, being the hallmarks of an effective risk management and compliance program. The risk management and compliance program is introduced in terms of Section 42 of FICA. FICA, just a bit of background on the Financial Intelligence Center Act. On the 2nd of October 2017, various provisions were introduced in the FICA Amendment Act and were enacted. These are designed to make the South African financial system intolerant to abuse through money laundering and financing terrorism. So FICA definitely is one of the pieces of legislation next to the Prevention of Organized Crime Act that is very financial crime and money laundering facing and contains measures aimed at accounting and reportable institutions to mitigate their risk of exposure to the unlawful proceeds of crime. Accountable institutions, which handle large sums of money, such as estate agents, banks, law firms, and foreign exchange service providers, these individuals are often, or these institutions, by virtue of their dealings with large amounts of money, are often targeted by fraudsters to launder the proceeds of criminal activities, and they are impacted by the Act, and there are certain obligations on them in terms of FICA, and one of these obligations is to introduce an effective risk management and compliance program in terms of Section 42. Accountable institutions were required to adopt and implement their risk management and compliance program on the 2nd of April 2019. So we are more than a year past that date. And we're seeing the Financial Intelligence Center conduct inspections and provide comments in relation to these risk management and compliance programs. And often we are being approached by entities to have a look at their risk management and compliance program and see and manage the way in which we can assist them in tailoring this risk management and compliance program to suit the needs of their particular organization, number one, whilst still embodying and ticking the various check boxes in terms of FICA. I had the privilege of assisting a large organization this year with having a look at their risk management and compliance program, which was an enjoyable exercise. And I hope to provide you with some insight on that during the remainder of this presentation. So in broad terms, accountable institutions are required to implement this program, this risk management and compliance program, with a view to minimizing their money laundering and terrorist financing risk, as well as ensuring that they have effective protocols in place to address that risk. The RMCP must enable the accountable institution to identify its risks, to also have protocols in place to assess those risks, to provide for the monitoring of those risks through customer due diligence and sometimes ongoing customer due diligence, as well as methods that it can use to mitigate and manage the risk arising from its products, its services, or its related activities. And this speaks to a situation where the RMCP must then be tailored to the organization's operations in order to cater for those particular products and the risks arising from those products relevant to the accountable institution. The RMCP must provide for the way in which accountable institutions determine if their prospective clients who are either in the process of establishing a business relationship, whether that be for numerous transactions or a single transaction, or even for existing clients. It is also required to ensure compliance with Section 20A of FICA, which relates to the prohibition of establishing a business relationship or concluding a transaction with an anonymous client or client with a false or fictitious name. And it provides measures in which to establish and verify identity of individuals and entities in accordance with the accountable institution's KYC obligations to know their customer. Part of the amendments to the Financial Intelligence Center included the introduction of ongoing monitoring. And this basically means a determination of whether the future transactions by a client are consistent with the institution's knowledge of a prospective client. Where you see large sums of money being deposited into a bank account, for instance, that are inconsistent with that institution's knowledge of a prospective client. If an individual X has been earning 20,000 Rand for 3 years and suddenly you see a deposit of 500,000 Rand, that is an immediate indicator of some sort of risk in relation to the proceeds of crime. And for this reason, ongoing monitoring of future transactions is central to the risk-based approach. It also provides for additional due diligence measures in respect of legal persons, trusts, and partnerships. These are entities that are generally targeted as conduits for money laundering activities. It also provides for ongoing due diligence in respect of business relationships, as we have just discussed. And it provides measures to examine complex or unusually large transactions or patterns of transactions. You'll note that in terms of Section 64 of FICA, there is a indicator relating to smurfing or patterns of transactions with similar amounts of money coming through. And these types of transactions are generally aimed at avoiding some sort of reporting obligation by keeping the amount of money under a specific cash threshold. So Section 64 provides for conducting transactions to avoid reporting duties. And any person who conducts or causes to be conducted 2 or more transactions with the purpose of avoiding giving rise to a reporting duty is guilty of an offense. And this is a typical indicator of some sort of fraudulent activity. In the investigation that I had dealt with this year relating to money laundering, that was one of the features where individuals requested payment to be made of a similar amount, albeit a very large sum of money, to avoid attracting any sort of attention. But that is something that is very quick to the eye in any money laundering investigation. A risk management and compliance program must also confirm information relating to a client when it has doubts about the veracity of that information received. So where information seems or appears to be false or invalid in some respect, there must be some sort of steps that an organization can take to request proof to support the information provided. It must also provide for the manner in which a organization or accountable institution terminates existing business relationships that are high risk. I had the pleasure of also advising on this aspect earlier this year, and the steps taken by an organization and what were the factors that this organization took into effect when terminating a business relationship. In that case, it was with a politically exposed individual, which brought a significant amount of negative media attention to the organization in question, and various allegations of unlawful activities were involved. And so the question was whether there was sufficient grounds for this organization in terms of its risk management compliance program, as well as its legal obligations to terminate the business relationship, which there was, and the legal relationships was subsequently terminated. And whether, and of course, a risk management and compliance program must determine whether a prospective client is a foreign prominent public official or a domestic prominent influential person, commonly known as PIPs, more commonly known as politically exposed persons, which we'll touch on in the last part of the presentation. And how this organization goes about conducting enhanced due diligence measures for higher risk individuals, such as those politically exposed persons. It must also provide for how records are maintained as required in terms of the Financial Intelligence Center Act. It must also address the accountable institutions' reporting obligations in terms of the Financial Intelligence Center, including in terms of Section 29, relating to the reporting of suspicious or unusual transactions. And where an accountable institution has branches or subsidiaries, it must provide for the implementation of the risk management compliance program to its subsidiaries or foreign operations, as well as processes relating to the implementation thereof. The RMCP must also indicate whether any of the above requirements are not applicable, and if so, provide for reasons why they are not applicable. And the board of directors and senior management, as well as other individuals exercising the highest level of authority in a particular organization, must approve the RMCP. This is, in my view, consistent with the concept of tone from the top, and senior management or individuals in the C-suite, the CEOs and the COOs, having a very prominent part in approving the RMCP. An accountable institution must also, at regular intervals, review its RMCP. This is not a static document. It is a document that is continually changing in order to encompass changes in legislation, as well as ensuring that it remains relevant to the AI's operations. Where a new product or a new service is offered, it must then adapt to encompass the risk that is posed by that particular product, or a new, perhaps a new audience or clientele that is attracted by virtue of that product. And of course, an accountable institution must, on request, make a copy of its RMCP available to the Financial Intelligence Center or its relevant supervisory institution, such as the EEAB, for its inspection. Section 42A of FICA speaks to a situation of compliance, and basically it states that organizations must take the steps that are necessary. Accountable institutions must have a compliance function to assist its board of directors or the senior management, as the case may be, of that institution in discharging their obligations, and it must assign a person, usually a compliance officer, with sufficient competence and seniority to ensure the effectiveness of the program. So that is really the hallmarks of an effective risk management and compliance program. Prior to moving on to politically exposed persons, the last part of the presentation, just a few insights that I had when dealing with the risk management compliance program and advising on it during the course of this year is that I cannot stress enough how important it is for this risk management and compliance program to be tailored to the organization's operations. It will differ for each organization. Banks, whilst they may have a similar risk management and compliance program, will also depend on the market to which they offer services. Banks that have individuals with a higher net worth must have appropriate procedures, protocols in place to deal with that, that relating to basically politically exposed persons and other higher risk individuals. And that goes, the same for instance, law firms, when creating their risk management and compliance program, must be aware of the risk that they face in providing legal services to politically exposed persons or to individuals who have been subject to media scrutiny, where the concern is that they would be paid or transactions would involve the proceeds of unlawful activities. So really, the risk management and compliance program is not a one-size-fits-all document. It's a document that must be cognizant of the services provided by that particular accountable institution. It must also be a composite document of all the measures that that particular organization has in place to deal with risk. So the policies, the procedures, the protocols, how it goes about reporting suspicious transactions, who the individual who is responsible for reporting those suspicious transactions are, because suspicious transaction reporting is subject to a degree of confidentiality, and that must also be addressed. And that is, the risk management and compliance program must really speak to a situation where it addresses the risk of the particular products that institution has available. So moving on to politically exposed persons, and I pause to mention that there's very little case law available in terms of Section 42, as well as Section 21 relating to politically exposed persons, simply because these amendments are so new and only came about in 2017. And so it's a very exciting area of the law, because it is an area that is most likely to be developed in the coming years. And that's really something to look forward to. There has been one reported case in relation to politically exposed persons that I've come across, and I'll discuss that a bit later on. But really, when relying on these provisions in terms of FIC, one is guided by the recommendations of the Financial Action Task Force, as well as the Wolfsburg Group, to ensure that one's clients and accounting institutions align themselves with international best practice and governance when dealing with higher risk individuals. I had the pleasure of advising on that this year as well. And, the steps that an individual can take when dealing with higher risk individuals often requires a degree of creativity, simply because aside from accountable institutions in terms of FICA being obligated to conduct this risk, there is little else governing the operations of other entities that are not accountable institutions when dealing with politically exposed persons. And so it's a situation where these individuals and entities must be dealt with in accordance with best practice, which comes from FATF, and in my view is furthered in the Financial Intelligence Center Act. So Section 21 of FICA. I think as a starting point, we must talk a little bit about politically exposed persons and what they are and the level of risk that they pose. So, politically exposed persons are generally individuals and only individuals, not entities, may I add, that are in high-ranking positions in the public and the private sector, or have been for a certain period of time, or were and are no longer for a certain period of time. And these individuals are not necessarily corrupt individuals, they are not necessarily fraudulent individuals or perpetrators, but by virtue of the office that they hold and their rank, they are associated with a degree of influence, which in turn is associated with a degree of risk. For example, an individual in government in a very high procurement capacity has the influence to award lucrative state contracts to certain individuals or entities, and by virtue of that position has a degree of risk attached to him or her. Generally, politically exposed persons, in instances when they are actually found to be fraudulent, they tend to usually have a modus operandi in their dealings. They often use corporate vehicles to obscure the ultimate beneficial ownership of funds. They use intermediaries. In South Africa, we have seen various professional firms being targeted by politically exposed persons as intermediaries and have subsequently been involved in scandals as a result of it, as well as the use of their family members or known close associates when transacting, be it through using these individuals' accounts or starting front companies in the names of their members of family or close associates, or dealing with those close associates when transacting. And that's generally the modus operandi of politically exposed persons and how they pose a greater risk when dealing with accountable institutions. These provisions are dealt with in Section 21 of FICA, which makes a differentiation when it comes to prominent influential persons. So basically, as an umbrella term, prominent influential persons are individuals, both domestic and foreign, who occupy prominent positions in the public and private sector. Such persons are likely to be exposed to corruption on a larger monetary scale in their day-to-day business dealings. As I had mentioned, for instance, or for an example, the individual in a senior procurement position in a government institution is likely to be exposed to corruption, not to say that he or she will accede to that corruption or acquiesce to that corruption, but is more likely to be offered some sort of bribe or some sort of gratification in exchange for the award of such a tender. And when it comes to dealing with these individuals, accountable institutions are required to apply a higher standard of CDD or customer due diligence to prominent influential persons. Prominent influential persons being the lingo adopted in the Financial Intelligence Center Act to name politically exposed persons, which is the more commonly used term. So Section 21 of FICA deals with both domestic prominent influential persons and foreign prominent public officials. It draws a differentiation between the two. If an accountable institution determines that a prospective client whom it engages with to establish a business relationship, or even the beneficial owner of that prospective client is a domestic prominent influential person or a foreign PPO, and according to its risk management and compliance program, that particular business relationship or even single transaction entails a higher risk, it is required to do the following. And these three factors, or these three applications, are applications that are required in terms not of only of FICA, but are also aligned with FATF's recommendations in relation to dealing with higher risk individuals. And that is to, number one, obtain senior management approval for establishing the business relationship. There we see a migration of tone at the top, and requiring senior management to be involved and applying their minds to establishing the business relationship. To conduct enhanced ongoing monitoring of the business relationship. So to be aware that the business relationship is an ongoing and changing one, and to take the appropriate measures to monitor that relationship on an ongoing basis, to see whether there may be any red flags or indicators in future, as well as to take reasonable measures to establish the source of wealth and the source of funds. So where is this money coming from? And this may sometimes involve the production of, for instance, a questionnaire. I recently prepared such a questionnaire relating to the source of wealth and the source of funds. And the questions that I had posed there speak directly to the definition of money laundering in terms of POCA, which is to conceal or disguise the nature, location, source, disposition or movement of the funds. So that, in my mind, can be translated into asking, what are the source of funds? Is it a salary or is it an inheritance? If it is a salary, can you provide us with a proof of your salary slip? If it's an inheritance, can you provide us with the necessary will that was involved? Where are the funds currently being stored? Are they being stored in a bank account? Are you the registered owner of that particular bank account? If they are not stored in a bank account, where are they stored? Can you provide us with some sort of proof relating to the institution which is the holder of these funds? Has these funds moved through a foreign jurisdiction in the past 6 months? If so, which jurisdictions were those, and were those considered to be high-risk jurisdictions, and so forth? So it's really taking an approach of establishing the source of wealth and source of funds by virtue of the knowledge of how these funds may be disguised or concealed, and trying to just break down the barriers and finding the true source. So as I had just mentioned, accountable institutions are required to scrutinize transactions throughout the business relationship with the customer to ensure consistency with that accountable institution's knowledge of the customer. And any inconsistency would then potentially be a red flag. These measures are applicable to FATF's recommendation 12, and its most obvious effect is to enhance the accountable institution's ability to detect these unusual transactions concerning the customer. Also, aside from detecting, to take the reasonable measures once that detection has been made to prevent and deter, which may involve the reporting of a suspicious or unusual transaction in terms of Section 29 of FICA. Section 21H of FICA, aside from your domestic prominent influential persons and your foreign PPOs in 21 F and G, includes family members and known close associates who are also subject to a higher degree of due diligence. And why, you may ask? Because in most instances, and when I have had the pleasure of advising on politically exposed persons and the risk that they posed, or even investigating them for potential money laundering, which I've had also the privilege of doing this year, is that more often than not, in most of the instances that have come across my desk, family members of those politically exposed persons, as well as their known close associates, and a known close association can be established in a number of ways, including media reports, right? These individuals are often used as conduits, or if not conduits, do form some part of the transaction involving this politically exposed person. And if I just think back to the examples that have crossed my desk, it was a family member that was involved in a very similar transaction at the same time, using or shall I say misusing this particular entity to launder the proceeds of crime. Known close associates, again, would be individuals who are known through their business dealings or transactions, be it through media reports and the like. And so for this reason, because the modus operandi of politically exposed persons and instances when they do misuse organizations so often involves family members and known close associates, it is for this reason that sections 21H and G apply to their family members as well. And this is in line with international best practice because this is a commonly known and commonly used modus operandi by politically exposed persons. So just moving on to the definition of what is a domestic individual, it's an individual who holds or who has held at any time in the preceding 12 months prominent public functions. It includes a person acting in a position for more than 6. It also includes people acting in such positions. And it includes the deputy president or president, government ministers and deputy ministers, premiers of province, and members of executive council of those provinces. It also involves the chairperson of a board of directors, chairperson of an audit committee, an executive officer, a CFO, an individual in a position of head or other executive directly accountable to that head of an international organization based in South Africa. What is a foreign prominent public official? It is an individual who holds or also has held in the preceding 12 months in any foreign country a prominent public function, such as a senior executive of a state-owned corporation or a high-ranking member of the military. And then this is the case that I had mentioned a bit earlier, which is the case of Castle versus Thompson. And that case relates to the question of politically exposed persons being dealt with in South Africa. And in this particular case, it concerned the declassification of an individual as a politically exposed person once that individual has exited the office. So this particular individual did occupy a high-ranking Castle. He occupied a high-ranking position in the public sector for a period of time, and he subsequently exited his office. But upon exit, his classification as a politically exposed person on a particular database was not removed. So he had argued that his continued listing as a politically exposed person long after his exit from office was defamatory. And I think that, argued a different way, the outcome could have been different. But I think it was his use of the term defamatory that did him down in this particular instance. And the High Court reasoned that particular political exposure attached to individuals by reason of occupancy of high office does not itself imply that such individuals have abused that office or are otherwise corrupt. There is no presumption that merely listing a person as a PEP renders them suspect. And this, I think, speaks to something that is continually reinforced in the FATF recommendations, is that a person, by virtue of being a politically exposed person, is not simply corrupt, is not simply subject to some sort of corrupt activity, or is not necessarily involved in a corrupt activity. It merely means that by virtue of the office that they hold, they are exposed to a greater degree of risk, and that risk in turn provides a higher risk or exposes the institution to a higher degree of risk when transacting with this particular individual, and that in turn prompts a greater degree of due diligence. And it's not necessarily, as Castle argued, defamatory to be listed as a politically exposed person. And just going back prior to concluding, I'd just like to state that in terms of Schedule 3A to FICA, which relates to domestic prominent influential persons, included in that definition of domestic prominent influential persons, which is that meaning South African prominent influential persons, is the chairperson of the controlling body, being the chief executive officer, the chief financial officer or chief investment officer of a municipal entity, as well as any person in the position of a chairperson of the board of directors, a chairperson of the audit committee, executive officer, a CFO, of a company as defined in the Companies Act. So that extending not just to the public sector in South Africa, but also to the private sector. However, that company must provide goods or services to an organ of state and of a specific annual transaction value. And that's just a bit about domestic PIPs permeating both the public and the private sector. And that's it on my side. So thank you very much. I hope this has been an enjoyable presentation, and I hope that it has provided some insight to you.
Great. Thanks so much for your session. I think often we underestimate the importance of legislation regarding the emerging fin crime activities. It's always interesting to see that the usual suspects of pyramid schemes, 419 scams, and changing bank details are still around, even though most of us have heard about this for many years. So it just shows you the good old tricks still seem to be the favorite amongst the fraudsters. I mean, thanks for your insight. I think the critical part, I think that we underestimate often is the importance of legislation, speaking to the right people with the legal know-how to navigate around these things. Often we maybe try and do it on our own, and maybe we get into a bit of a quagmire there. So I do appreciate, a lot of the information. There's lots of technicalities around this. I know recently in Botswana last year, they introduced the Financial Intelligence Act. And people needed to implement it within basically a month and a half, really quickly. And then I know there was also with the FATF, there was concerns around money laundering in the country, and potentially they might not be able to invest, globally. So I think all of these comments you've raised are really critically important, as we navigate locally, and obviously funds coming in and out of the country. You need to be cognizant of that. And I think the point that you really raised around the RMCP, I think that's a critical part for us not to forget. A lot of other countries, in Africa and the world, they operate largely off the legislation that's been promulgated and in effect in South Africa. So they might change the wording here and there, but largely they leverage off what happens in SA. So thanks for your comments and your feedback. Really appreciate it. I don't see any questions coming through, but just want to make sure you are still online, and if people want to reach out to you, they can pop you a message and ask you some information. Is that still okay, Ms. Pillay?
That's more than fine, thank you. And I think just before I sign off, I think you mentioned a very interesting point, which is that developments in sub-Saharan Africa are definitely something to monitor. I think South Africa has really set the trend in that case with our Financial Intelligence Center Act. And I think that the trends that we are seeing in South Africa are for sure going to be mirrored in sub-Saharan Africa. And it's definitely something to look out for and to monitor and possibly to advise on in due course. So thank you for mentioning that. I'm happy to take questions also via email. So I did put my email address up, but just for ease, it's Krevania, that's Krevania.Pillay @cdhlegal.com. Should anyone require my assistance, I'm more than happy to help. And thank you, ACFE, for the opportunity. It has been such a pleasure.
Great. Thanks so much, Krevania. And just that everybody knows, AI is not artificial intelligence, it's accountable institutions. So just in case we get the two confused. Thanks so much for your time. We're going to wrap up the session now. have about a 10-minute break and then go on to the next session. So I'll catch you all on the flip side. Thanks so much, Krevania, for your insights. We'll chat to you soon. Have a break, search the lobby, and we'll see you in about 10 minutes. Thank you. Bye.